Welcome to Delphos Insights. Today we're opening up the source material for a really interesting deep dive. We're looking at a pretty profound shift in global trade patterns.
Yeah, specifically how supply chains are diversifying and how that's kind of redrawing the logistics map in Asia.
Exactly. Our mission here is to unpack how things like, well, new tariff rules and some really bold infrastructure investments are creating entirely new ways for goods to move. We're zooming in on a shift where maybe the focus isn't just on established players like India, but towards rising hubs, Cambodia specifically.
And the thing that really jumps out from the data, the hook for us, is this projection. Cambodia's export growth rate looks set to actually overtake India's starting this year, 2024, and rising pretty sharply, potentially up to 11% by 2027. That's a big signal if you're deciding where to build next. Okay, so let's unpack that. This +1 strategy, adding a secondary production base. Why are companies so focused on this right now?
It really boils down to resilience, doesn't it? Managing risk. Companies realize they need options, a plan B that isn't facing the exact same pressures as their primary base. And there are three main things pushing this diversification. First, tariff volatility. It's become a huge factor. Look at the example in the sources, the U.S. hiking tariffs on Indian gems and jewelry up to 50%. That's set to kick in August 2025.
50%. Wow. That basically stops trade in its tracks for those goods. It changes the whole economic equation overnight.
Absolutely. And the potential impact is huge. Something like 170,000 jobs are at risk just from that one move. So sectors have to look for alternatives proactively.
Okay, so tariffs are number one. What else?
Second is logistics. Persistent bottlenecks, congestion at ports, at airports. It just throws a wrench into those lean, just-in-time supply chains everyone relies on, especially in established, dense manufacturing areas. And the third driver, simply rising costs, operational expenses, labor costs. Take Tamil Nadu, for example. It's incredibly dynamic, yes, but costs are going up. That prompts companies to look around for places offering more, let's say, long-term cost stability.
Right, which brings us neatly to Cambodia's counteroffer. They seem to be pitching stability, affordable labor, but also, crucially, a different regulatory picture backed by some serious new infrastructure.
Yes, and their advantage really starts with policy. Let's talk tariffs again. Cambodia's general MFN tariffs, the most favored nation rates, they hover around 6 to 8%. That's already quite a bit lower than India's general rate, which is more like 11 to 12% on average.
Lower is good, but you mentioned something even more striking.
Exactly. The Cambodian government brought in a 0% tariff on all goods imported from the U.S. And look at the timing effective August 2025. That's clearly a direct response, right? A strategic move to capture business just as competitors might face those 50% tariffs we mentioned. It fundamentally shifts the sourcing calculation.
So lower tariffs meet massive infrastructure investment. Let's talk about the big one, Techo International Airport, or KTI. This isn't just any airport. It's a $2.3 billion project rated ICAO Class 4F. Now, for you listening, that 4F rating is key. It means it's built to handle the absolute biggest cargo planes out there, the long-haul giants like the Boeing 747-8F. That signals, well, serious global ambition.
And the scale is impressive. The planned annual cargo capacity for KTI is 175,000 tons. Now compare that. You look at a significant regional airport like Coimbatore International in India, its handling was just over 12,000 tons last fiscal year. So KTI's capacity is on a totally different level. It opened the door for Cambodia to handle much higher volume manufacturing exports, not just niche goods.
That scale is definitely impressive. But is the rest of the ecosystem ready? Like the local logistics, the workforce, can it actually absorb the kind of volume KTI is built for right now? Or is it a case of build it and they will come?
That's the race, isn't it? But KTI isn't happening in isolation. It's part of a much bigger picture, a multimodal strategy designed to mature that domestic logistic capability fast. We absolutely have to mention the Funan-Techo Canal. Think about this. A 180-kilometer canal costing $1.7 billion, designed to connect the capital city area directly to the sea by 2028.
Wow, building a major canal in the 21st century. That sounds ambitious, almost like a 19th century project.
It is audacious, but it's paired with modern road infrastructure too, like the new expressway heading towards Vietnam. The goal is clearly to knit the whole country together and link it efficiently into the wider regional supply chain, slashing those internal transport costs.
Okay, so pulling it all together, what's the main takeaway here? It seems clear these huge investments, the airport, the canal, the roads, they're all laser focused on making Cambodia a really crucial logistics hub. The Delphos CEO actually predicts 2026 could be the breakout year, the year Cambodia really steps onto that global cargo stage in a big way.
But development on the scale needs enormous funding, and that raises a critical question moving forward. How do you finance this sustainably? Can successful PPP models, public-private partnerships like, say, the $125 million DFC-backed loan that helped finance the complex Greek shipyard rehabilitation, can models like that be adapted? Can they secure the kind of long-term, stable financing Cambodia needs to keep this logistics expansion going and really capitalize on this moment? That financing piece is probably the next big challenge.
A really important question to track. This has been Delphos Insights. Learn more at delphos.co.